Welcome back to Closing Bell on the 16th of February on the Tuesday 2021. So today I want to speak about two key stocks that's moving the market and which you guys should know as part of the investors group here. So first one is Palantir's earnings. They've lost so much ground to lost about 13%. And secondly, Warren Buffett's changes in his portfolio. So let's start off with Palantir. So Palantir's stock has fallen about 13%, up to as close to $27.84. And what's happened? So the revenue expectation was great. Top revenue 2020, they closed to a $1 billion revenue. It's great for a company that size, But the future forecast and the EPS has just missed it. Analysts do not like those numbers. So a loss of 8 cents compared to expectation of breaking even at 0.02 wasn't impressive enough. And the fact that 2020 closed with a 47 revenue growth percent, it's great. It's a hyper growth stock. 47% is classed as a hyper growth stock. That's why folks were trying to push it as high as $40 per share. But the report came in for 2021, the future expectation revenue growth would be only 30%. So you're talking about hyper growth downgrading to just a growth company, not so far difference from Salesforce or CRM. So that's not really impressive because there were a lot of high hopes for Palantir's investors. So even though the revenue beat a 1 billion expectation, next year it's not going to be looking really good. One thing that I would like to point out, my personal point of view, which I had concerns initially, was the Q3 expenses. Q3 expenses came by 880 million. Very, very high. But however, in Q4 it came 150 million, so it shows that the system upgrade and hiring of new people, expanding in the company actually paid off. So Q4 coming through, Q1, Q2, Q3 for next year will be looking quite lucrative if they get more contracts. But the only uncertainty is, why is the growth so low? Perhaps they're trying to focus on the existing client. Perhaps there's only capacity with the manpower that they have to adequately support the existing client, and then perhaps room for growth in future will have to be seen. They're just playing conservative. High-end clients like the defense, government bodies, and these things needs to be addressed very, very meticulously well. So if you're an investor in Palantir hoping for hypergrowth, I would say take it off your list. It's now a growth company. So 2024 and forward, don't expect high jumps, 30-40% in a single day. It's time to sit back, settle down for a company to slowly spread its wing and grow, grab clients, and end of the day, it's a business to business company. It's not a business to consumer where they actually sell product to end retailers like you and me. If you're holding for hypergrowth, then perhaps you need to risk transfer to somewhere else. But if you're hoping to get to a $40 stock by the end of 2021, then hold it. Because if it breaks even this year and with 30% growth, Palantir is base case a $40 stock. That's all I can say, and that's what I'm presenting to you, so understand what you are buying. Let's go to Warren Buffett's Berkshire Hathaway. People on Twitter are laughing that Warren Buffett has just lost it. Katie Wood's a new king. Why? Because Warren Buffett has decided to buy plenty of Chevron, plenty of Verizon, and then on this other side, offloading JP Morgan, selling 6% of Apple, and also selling off Barrick Gold. Has Warren Buffett and his team lost their mind? Plenty of cash, and that's what they've done. But let's take a step back and listen to the guru of Omaha on why he's doing that. End of the day, Warren Buffett is a value investor. He's not a hyper growth investor like you and me. Okay, value investor looks for deep value with growing dividends, and therefore Chevron and Verizon will provide that basis. Think about it. Verizon 4.64% dividend, growing yet year on year, and Chevron 5.54%, and their stock price looks to be adequately growing 4 to 5% a year still. In 8 years, one of these two companies, or most likely these two companies, will double your money if you invest today. So if you invest 10 grand or 100 grand in Chevron or Verizon today, dividend reinvestment, all pump it back in, you will double your stock in 8 years. If you're a dividend type investor, if you're a long-term type investor, it will suit you perfectly well. But then if you're a younger person who demands growth out of 2020, who demands growth, who wants to see 2x, 3x, 4x, perhaps this is not the avenue for you. So these are the movements. For me personally, it's normal to take profits. It's okay to take profits, secure more cash, buy on the right time, buy on the right value. So if you're a value investor like me when I was in my last life, a value investor, I think this is a valid move. If you're going for homing for dividend, if you're homing for more steady growth. okay, and also in the amount of acceptable risk. But if you're hyper growth, you're looking for growth, then you need to seek for more Katie Wood type formula, Katie Wood more future forecast. And that's it. Everybody is a different investor. Warren Buffett's not wrong, Katie Buffett's not always right. So there's always a balance of what risk you can appreciate, what risk you can take. So this is me on Palantir and also Warren Buffett's Berkshire Hathaway movement. I hope you enjoy, and please click like and subscribe, hopefully to see you more in future for information like this. Take care, have a good day, bye.